Hello, NAAIA community. Get ready to relive insightful discussions, gain fresh perspectives, and be inspired by the wealth of knowledge our community has to offer. Let's dive into another episode.
I am Baxter E. Hall. I have the privilege of sitting as Vice President for the NAAIA Detroit chapter. My day job is VP and Client Executive on the benefit side of the house for Capnick Insurance Group. So looking forward to interacting with everyone. Please keep questions going in the chat, and we will have some great conversation with our two panelists.
Amazing. We'll have an amazing discussion. I will get my popcorn ready and sit down in my seat and be ready to take notes and engage as well. So I'll let you go ahead and introduce everyone and get the party started. Thanks again, Baxter.
Sounds good. Thanks, Precious. So I will allow them to go in a bit more detail, but the two panelists that I am working with and learning from today is first is Yusef Burgess, the managing director, and then I have Raquel Tillman. She is CEO and chief advisor. So you all can add a little color to both of your titles and kind of tell us where you're from and what some of the duties that you handle from day to day. Yusef, if you want to start.
Sure. Thanks, Baxter. Good morning, good afternoon, NAAIA. My name is Yusef Burgess, Managing Director of Strategic Insurance Advisors, located here in the Houston area. We're a commercial insurance brokerage focused on primarily three areas: construction, transportation, and commercial real estate. We do some other financial products as well. But I'm happy to be here today to kind of talk about building trust with submissions.
Thank you.
Good morning. Good afternoon. I'm Raquel Tillman, CEO and Chief Advisor of Tillman Insurance Advisor, and we're more of a full service independent insurance agency specializing in commercial and personal lines, and then we wrap around life and health products for our personal and commercial clients. I'm in the Charlotte, North Carolina area with 2 locations here, and I look forward to sharing with you guys some information to help you be successful.
Good deal. Good deal. So, as many folks, if not everyone, knows that when there are submissions made to underwriting, it's not just the black and white submission. There's a certain amount of storytelling, there's a certain amount of familiarity that you all need to have or you want to have with the underwriters to kind of paint the entire picture or as much of the picture as you can. My first question to you both, and Raquel, if you would want to start, what are the key elements of a submission that immediately sort of signal to an underwriter that the agent understands the risk well?
Oh, good question. And just some background. Prior to owning the agency, I worked in the carrier side as an underwriter for 12 years and then as a territory manager for about 3 to 5 years from there. So I'll give it to you with all that wrapped in it. The biggest thing is a full and complete submission. Even if it's information that you don't know, you kind of need to say, I'm still don't know, I'm working on it. So they recognize that you know it's there, but it really is a full and complete submission. As much information as you can give about your relationship with this client, if you have one, is important. And if it is a commercial client and they have a website, you need to give that website that lets them know they can go look there for information, and you should have already looked at that website and made sure everything is there, you're able to explain, and you know what's there. I think that that is extremely important, but the first is a full and complete submission to that underwriter.
So if I could just follow up, so you kind of have the cheat code, right? Being on both sides. What what were some of the things that you appreciated on the underwriting side from agents that with their submissions? Like what are some of the key components that made you, more comfortable with what they may be submitting?
Probably the most important box was the description of operations. And
Mm,
that's probably one that most agents write, drywall contractor. And they would just put whatever that classification is. But if they could have put drywall contractor, and I know it might be repetitive, that's been in business 12 years, it's a family-owned a family-owned construction company with the dad and the daughter, or they've done this, they do drywall for commercial and maybe 2% personal, and like you give a full description of that operation right there, you've already set the tone for what now that underwriter is going, me as an underwriter, I would now go looking for. And now I don't have to flip through a supplemental. I don't even have to flip through the rest of it. You've already set the tone for how I feel about that risk right there. And you set that, not me going into the application to figure it out.
got it, got it. Yusef, what are the key elements from your standpoint? Um, so the same question that Raquel just
Yeah,
answered.
yeah, absolutely. I think Raquel is definitely on point. The full and complete submission, which would include all of the applications, all the Accord apps if necessary, if you're not doing it, straight through the carrier's website. But you also want to add in, the storyline, providing metrics like if you're submitting a trucking risk, you want to provide the metrics, you want to provide their safety management scores, all the details about where they're at. And if there is, hair on the risk, what are the things that the owner of the business is willing to do, and what what compliance measures, what things that have they put in place that will help to reshape the risk if it's in a negative sense. But overall, a lot of risks, different companies have different risk, and so you want to make sure you pinpoint where they're at and what they're doing and what they can do to improve, or what they put in place to improve, on the application that they're submitting to underwriting.
Yusuf, how important is transparency in your opinion when there is a little hair on the submission or just the risk, right, in general, when you're talking to the underwriters? I mean, how important is, not only the communication with the owner or the client, but then also just the actual underwriters as far as what they need to know?
I mean, it's a delicate balance. You're
Mhm.
representing the client. You're also trying to make sure that they have the coverages necessary for their business to grow. Transparency is key. I think there's definitely ways that you can, um, form, form your opinion, or form a positive description of a negative event, if you would.
Mhm.
But I think the key is to make sure that you're, outlining and describing, the actual business as it is, its operations, and the hazard risk that you're, which is the reason why you're submitting it to the carrier. You want to make sure that you're outlining everything as accurately as possible, and then addressing the questions that, most likely are going to come back if there is something that's missing.
May I add to that, Baxter?
Yes, please.
So, what I tell my clients when I'm doing a new client intake or maybe even a renewal review or we're remarketing that client, I tell them that they have to tell me everything, almost like I'm an attorney. The more I know about them, the better I can represent and get a good price and coverage for them because I know everything. And the last thing they want me to find out is that something is there they didn't tell me, that the underwriter somehow find out because their Google search brought up something different. So I tell them to tell me everything. Like even if they think I don't need to know it, and maybe I don't always put it up front, but if an underwriter asks me a question, I like getting back to them like that. The quicker I get back to them on that answer, the more they know I know this account. Maybe it was something I didn't think they had or it wasn't in the supplemental, because your underwriter will come back with questions because I think we're just trained that way. But if you can go back right then and give it to them the answer because you already have it, it lets them know that you really know that risk and you were able to answer it right away and give them an answer either they can have a discussion about or decline or just continue to move forward with that risk. And even if they decide they don't want the risk, you've still built that credibility. So the next time you submit something to them, they know that you're going to get back to them quickly and they can move forward because they've already gone to another account waiting for your answer.
Wow, that leads me to a question that I want to ask, but I want to ask you this first on just the framing of it, right? I mean, we are representing the client. To Yusef's point, you said I need to know everything. As you're sort of framing this story, and this potential client, to the underwriter, do you take any creative freedoms, or are how do you toe that line between all the information that they've given you versus what you're actually sharing with that underwriter?
Well, as I think Yusuf mentioned, you can put a positive spin on a negative thing that's happened. So when you are creative, that's what you do. I complete the application. So I don't necessarily always put everything in that particular application. However, if I know it's going to negatively impact that clients and it's something that they can go find without looking, like you see it on their website, or I've either addressed it with the client and I bring it up front, or I call them and have a conversation that I got this client. I know you're not too keen on this particular item, but it's only 2%, or then I have a discussion with the underwriter about it and I don't just sugarcoat it. That's how I typically do it.
Got it. And then the from the if you could put your underwriting hat on, why y'all always have so many questions about everything? Like, tell me about that. I know you're probably just trained that way, but then also I'm curious to know the responsiveness that you talk about. Do you feel like that's something that the underwriters are looking for? Okay, if you respond right away, you have a better grasp of this risk versus you're asking the client, now you're waiting for an answer. Like, do you take those things into account?
There's some of that. So let me answer the first question, why we ask so many questions. Um, an underwriter doesn't want to be wrong. They don't want to write a risk that they didn't know an exposure existed, or there was a claim for something that they didn't know about, or there was just a big claim and they didn't know the account. So just like, anybody, they're like, no, I want to be able to know I wrote this risk knowing it was there, I priced for it, and I don't want to get fired because, I wrote an apartment complex that, was known to be, something that it wasn't, let's just say.
Yeah.
So that answers that question. They want to know they're right, and you can't know everything. And sometimes some of these companies have very inexperienced underwriters. So maybe they'll think they'll get an answer, and some of them think that, a no is just easier when it's not just vanilla.
Mm,
And as far as the timing standpoint, underwriters, many of them have a lot of work on their desk. So if I can get to it and do it once and be done with it, that's what they probably prefer. But if I have to keep going back to you, now I'm just going to go to the path of least resistant. And that's somebody that comes to me quick while I'm working on it that afternoon.
got it. Got it.
That was definitely the way that I was trained in the business in terms of making submissions to underwriters. Part of it was to kind of view yourself as an existential, underwriter yourself.
Hmm.
You're an underwriter in the field, and from that standpoint, you're always asking yourself the question: what would I expect? What would look good to me? What would help me to kind of look at it, say this is something that I want to write?
Hmm.
Because I know that they're accountable for their book, like I'm accountable for my book. And I'm constantly thinking about risk, even from the standpoint of, um, you know, professional liability risk, getting it wrong with the client. And I think that they
That's right.
probably think about it the same way. So, again, just, going back to your question, Baxter, on, clarity and being upfront, I need to make sure I cover all my bases from a legal standpoint, but also trying to, paint the picture with the underwriter that this is a good risk. And sometimes you'll go back and forth. You can shoot everything their way and, let them know like, hey, this is a good risk, especially if they're pricing it differently. You can send over, different, we use tools for benchmarking. I've sent benchmarking to underwriters and say, I think you're pricing this wrong, and then this is the price. So, you're kind of stuck out there. But again, I think the key is to, to submit everything and, be as transparent as possible. But remember that you have an obligation to, protect yourself as the owner of your company, and then also, try to protect your underwriters as well.
Yeah, because this isn't the only submission you're going to make, right? You need to make sure that you are you have integrity when you're presenting
That's
things,
right.
and a good rapport for these for this relationship that you're building with these underwriters. I just want to remind everyone that this is interactive. We are starting to get some answers in the Q&A. Thank you for that. Please keep them coming. The first question that I have here is, as agents, are you meeting with clients personally or visiting the actual locations that you're insuring?
For me, it's both. It could be either one, depending on where the client is. I do have clients outside of Charlotte. And it also depends on the complexity of the risk, so it really just depends. Sometimes the underwriter will ask me questions, but quite honestly, many of them can go Google Earth and go find out what it looks like themselves. But it just depends on the client and the risk.
Yeah, I think for local property risk, I'm definitely visiting the site to take pictures and maybe even do a walk around with the applicant, um, just so I can kind of make an assessment for myself.
And
Got
quite
it.
honestly, if you can visit and just with time, business owners like talking about their business. They're very proud of their business. Most of them have put like a lot of sweat equity into that, and you can get a lot of information without asking questions by doing a visit. And if you don't know that line of business that well, is probably good for you if you're starting in the business to see as many clients as you can in person so you can get to know what it looks like to be in that area. And as you begin to get like your niches put together, the more you know about that business, when you see the 10th one that you do, you can begin asking them very clarifying questions that's very targeted, and they know that you know the business as well. So it is helpful in the beginning of your career as an agent to go visit as many as you can.
Yeah, that kind of leads into the next question in my mind anyway. Hopefully you both kind of see it the same. But how do you strategize to take a client from a sort of a transaction to a lifelong client? And part of that is visiting these business owners, right? And talking to them about their business, getting a familiarity there. But are there any other things that you would mention as far as how to make sure that these folks are lifelong clients of yours?
I would say, for me, what I'm looking is to solve, their most pressing issues when it comes to their hazard risk, their operational risk, and sometimes their financial risk.
Mhm.
Those are the three areas that when I'm asking questions, I'm asking to try to figure out what their pain points are to see if we have a solution for them. Um, like in the trucking space, those carriers that have high, safety management, scores, safety management system scores, they're not an attractive look for many carriers, especially if you're if your score is above a certain amount, generally I would say above 65, 70, you're not an attractive look for carriers. So what are the things that you have to do? You try to implement suggestions based on DOT rules and regulations on what are some of the things that you can do to mitigate your scores and bring your scores down. Now that process, depending on how many violations they have on their record, could be it's not an immediate process, but if you can start the plan and implement the plan and get them going down that road, I think what you're becoming to them is an indispensable advisor on what are the things necessary to keep their risk down. Same thing on the work comp side, with the EMOD scores, anything greater than a 1, you're touching, it's going to be, you're in that space where your rates might be higher. Well, what are the things that you can do from a safety standpoint to help bring down some of those scores if you've had any types of claims? Have you implemented changes into your risk program, into your safety program to help mitigate that moving forward? So, I think approaching not just, taking an application to kind of quote it, but trying to look at the inside, I guess, inside baseball, if you would, of their risk, and then talking to them at that, in that space, those are things that I think that lead to a long-standing relationship. And, you never know what's going to happen, because sometimes clients will leave you for, $1,000, and you never know. I mean, or you might not have access to certain markets, which, especially as a up and coming, broker, you're kind of going to be limited in that capacity. So, you work with the best that you can. You have to always be marketing and getting out and touching base with new prospects. But sometimes it's just unavoidable. But you can definitely do the little things on your end to help mitigate that.
And just from to take from a personal line standpoint, that's where the lifelong clients could happen, because most people tend to stick and stay where they are. And it really is about those touch points to those clients, whether it's email, text, chat, email, text, letters, cards, birthday cards or renewal cards. I've tiered my clients, so my top 100 clients get different type of treatment than the other clients, or my long-term clients, just recognizing and having some sort of system. Well, you've had this client for 5 years, 10 years, and celebrating those anniversaries. But the biggest thing is making a touch point at least once or twice a year, depending on the client, that you just do a check-in, however that client likes to be checked in with, from that standpoint, because your personal lines clients are also the ones that you don't have that regular interaction with your underwriter, but your underwriter is still managing that book. So that renewal retention that you're having with those accounts makes a difference. So if you're, churning your renewals, every renewal for that personal lines client, then the underwriter is going to look that maybe you're not that loyal. Even though you don't have a regular relationship with them, you still have an underwriter that is assigned to you somewhere, even if it's on a higher level, or maybe even your territory manager, because that's usually your outside underwriter in personal lines, building the relationship with them and getting them to know what kind of clients you write from a personal lines or a commercial lines basis, but what type of clients you want, so you can know what to put with them, because they're looking at it from a number standpoint, not each individual client. They're looking at what is your ratio of, quote to issue, and those kind of things.
Yeah. How do you both sort of walk the line of you're looking for better rates, there's renewals upcoming, hard market, etc. How do you ensure that you're not annoying folks, kind of going to market just for the sake of it, but not necessarily giving them business, but also wanting to keep the underwriters engaged? Like, how do both of you, if you wouldn't mind answering, how do you walk that line?
Well, I tell my clients that depending on how big they are, how often we're going to remarket them.
Mm.
So you set that expectation up front. So if it's a larger account, you're probably going to be remarketing it every year, and the clients want that. Maybe their operations change. If the operations change, or you have someone that has youthful drivers, or maybe their situation change or their driving history change, the more proactive you can be with the client where you set their expectation, the better it is. So if you're a newer agent, or we just kind of really did this a few years ago, so a more experienced agent, and you don't have a process for remarketing your account, that you can tell your clients that at Tillman Insurance Advisor, here's the service you're going to get. Every 2 to 3 years, we're going to, check the market for you with our markets, or every year for some of our larger accounts. So you set that expectation, and that can be done in the call. So when I call you in advance and say, hey, Baxter, your policy's coming up for renewal. I'm the advisor that's assigned to you. I've already looked at it for you. And just knowing the market, we're not going to remarket you this year because of 1, 2, 3, 4, and 5. Then that's gone. And they still may say, but I want you to. And now you're taking the direction of the company, but you're not, of your client, but you're not letting them dictate when that happens necessarily up front.
Got it.
Yeah, I think, we pretty much do two things. One, on the renewal, we're going to look to quote, multiple carriers. Doesn't mean that we're going to move it, but we're going to at least kind of check the marketplace. And then, if for our larger accounts, we're going to look to at some benchmarking data to try to get a better understanding of where they are, where they fit in with other competitive, not necessarily specific businesses, but along the lines of, how much revenue, similar types of exposure, similar type of SIC or NAICS codes, and then, try to figure out where they are on that spectrum. So those are pretty much the two things that we use.
Got it. All right. And I think this question is specifically for Raquel. But Yusef, obviously, if you have anything to add, but what are the pros and cons to being an agent versus an underwriter?
The pro of being an underwriter is that you have a salary that's coming to you every couple weeks, maybe a bonus, maybe I don't know what they do anymore, but I could get a bonus, I could earn some different things. There's usually a career path where, if I make senior underwriter, I get this much. If I make, excellent underwriter level, I get this much, and I could go to a manager. So there's a path laid out for you, that if that's attractive to you, that's important, and you have the security of a salary. One of the cons is that a carrier could change their underwriting direction. They could, I used to be in programs, and all of a sudden the carrier I wanted didn't want to be in programs anymore. So, I got laid off. That's how I ended up being an underwriter. And that was totally not because I didn't know what I was doing or I wasn't experienced. They just decided they didn't want to be in programs, and there was nothing that I could do at that time. So that would be a con. Then you're not in control of your path. As an agent, I tell people who come into the agency side that your income and revenue that you generate for yourself and your family is dictated on two things: your network and your hustle. If you got a lot of network, you might not have to hustle as much. If you got a hustle, you can build your network. So you are in control of how much you make based on pretty much those two things, at least in my opinion. And so you can make as much as you want and you can desire. The downside is you're in control of how much you want and you're in what you have. So if you're not hustling and you don't have a big network, then your salary and your revenue that you bring for you and your family is small. But the flexibility of being an agent is very attractive to me, especially with kids, from that perspective, that I can now be involved in whatever I want on the PTA and still be able to use that networking on the PTA to build my business from that perspective. So I enjoy the flexibility and freedom of being an agent.
Love that. Yusef, anything you want to add to that?
Yeah, I mean, the hustle is real. I'll say that. I didn't come from an underwriting background. You know, my background was more on the banking, trading, and transaction side. But you know, the reality is that it is about your network. You know, as a business owner, you know, everything falls to you, and of course,
Mhm.
you know, you have a a lot to deal with from an operational standpoint, and then you know making sure all the funds come in and you know the cash flow and everything else. So you know um, I would say that you know I wouldn't discourage anybody from doing it. I would just say that you know what you're getting into, you know, before you take that leap.
Mhm. Mhm.
No, that's great insight. Yeah, the hustle is real for sure. If you all don't learn anything else besides that. Um, so how do you choose what carrier you place business with? The second part of this is, are there things that carriers can do to improve their standing within your agency?
I would say you know like you know, being a smaller agent, I mean, it's to be honest with you, it's very challenging sometimes
Mhm.
getting the markets that you want. Um, you know, we do use a lot of surplus brokers
Mhm.
to get to the marketplace. Um, you know, I would think, you know, I also think that, you know, trying to get out and do different types of event with, you know, like here in Houston, they have uh, you know, the different organizations that cater to the insurance industry. You know, get out and try to meet some of the underwriters, get out and meet, you know, people that are might be helpful in developing the relationships that you're all, you know, the face-to-face relationships and being able to pick up a phone and call somebody, you know, to understand, you know, what their requirements are, what might be missing, you know, maybe even somebody to help, you know, get a risk over the finish line for you. But I definitely think that as a, you know, it's a very competitive landscape, and
Mhm.
the way that the distribution of insurance has changed over the last 10 years is, you know, we're at the top of the funnel. And, you know, it takes a lot to grow your book to the size where you're able to take a step down into that middle phase of the funnel and have maybe
Mhm.
direct access with carriers. But that
Mhm.
process is about building relationships, building a book of business that is consistent, um, and that helps to pay the underwriter, you know, the insurance companies for, you know, for underwriting that risk. So it's definitely a challenging. It's definitely challenging if you're new and you're coming into the business. You know, that's going to be one of the biggest challenges. I would say.
And for me, just because we span across, you know, the different lines of business, a lot of how we choose our um, carrier we're going to work with or grow with is based on their appetite, what they say they want, and what they write. Because they can say they want a particular style of family or they want a particular class of business. But if you say that and your pricing doesn't reflect that,
Mhm.
then we're going to go to somebody whose pricing reflects that, even if their appetite doesn't reflect that. So, at least for me and my staff that works on it, if a carrier is writing that business, you're going to see more of it. So it really does um, depend on that particular piece of it. What you're writing. What have you done for me lately, I guess, just to put it in, you know, plain words.
Yeah, I think that um, we really want to be
Mhm.
consultative, right? We want to not throw everything at our favorite carriers if it's not a great fit because of the relationship. We want to do what's best for the client, right?
Mhm.
And sometimes those two things don't align.
A lot of times they don't align, to be honest with you, because you might go with a carrier. Because if you think about it, if I cut my premium by $1,000, I'm cutting my revenue by $1,000, is, or not a derivative of that,
Sure.
right? So if I cut your premium to retain you, I've also cut my revenue as well. But now I still have some revenue versus picking that revenue back up. So there's always that fine line about it, but that's when kind of ethics come in. Like, doing the right thing for your client will also build that rapport, and not replacing that account every year will build your reputation with the company as well.
Yeah. Yeah. Um, other than continuing ed, how are some ways that you both are sort of educating yourself, sort of just ongoing product knowledge and that sort of thing?
I mean, other,
Um,
go ahead,
I would
Yusef.
say, I would just say, I get a lot of emails from, different entities that we look at. Um, you know, periodicals on the insurance industry. Um, we get, magazines from the insurance industry. I would just say, those are in addition to the continuing ed. Um, you know, take advantage of opportunities when if there is like a training or something like that in the local area or um, I don't know. I mean, I would say periodicals for us, for
Mhm.
myself, periodicals, trainings, also, you have like, you're going to get a lot of work if you're studying for your various certificates,
Mhm.
um, your CRMs, your CICs, your, associate risk managers or your CPCUs, you'll get a lot of, in it. It's a lot of work as well. So you'll get plenty of information and insight there that will allow you to kind of expand and study down areas of a particular interest. So the library is definitely open.
Yeah.
Well, and for me, in addition to the industry stuff and periodicals, going to different conferences that are there, if you have a niche, whatever that is, going to those particular conferences so you can learn more about your clients. Also, don't underestimate the training that your carriers have, even if they seem so simple, like you're learning about, I don't know, how to quote their account. They actually pay attention to who signed up for those webinars, because nowadays you got to put your name in and get signed up. So they're also seeing who is committed to my particular carrier that's taking this, how to write boat insurance or how to write cyber insurance, or using social media from their social media person that they have. So any of those things, they're usually over lunch, they're usually not that much, but if you sign up and show up, and sometimes just signing up is enough, because then they'll say, oh, if you missed it, you can catch it here. And they'll even see who caught it there. So using it as a podcast to listen to on your way to appointments or something like that, the carriers are actually looking at those things to see who really wants to know more about our products and our different things like that. So if you have some carriers that have those, don't discount them. Sit on a few of them a couple of times a year so they can see that they're really interested in learning more about our business, even if they're writing with us or not writing with us. They're trying to learn.
Yeah, Raquel, stay. I want to go right back to you. I just want to say, from my standpoint on the benefit side of things, um, carrier education is really important. You want to hear about the new products that they may be rolling out, but then also you're just reminded of some things. You're like, oh, I totally forgot about that.
Hmm.
I didn't, this was something I thought about last year when you presented, and then I forgot about it. This is a great idea. Let
Hmm.
me act on it.
Hmm.
Um, Google alerts, depending on the industries that you're
Hmm.
serving, certain keywords that you just want to sort of be made, stay in the loop of, or what's ongoing, I think are some other ways. And then the networking piece is huge in my opinion. You don't know what the other folks in the industry are talking about unless you're out kind of in the mix a little bit. But Raquel, you talked about sort of showing up for these webinars, kind of, having to provide your name, email. They see these names. That's part of building rapport, right?
Mm-hmm.
Can you think of or point to an example where you have had the risk wasn't great?
Oh,
The
yeah.
carrier didn't have the greatest appetite, but because of the rapport that you had with that group and that underwriter,
I didn't lose the market.
yeah, talk about that.
I had a client, it was a pretty big client who sold to convenience store. So all the little knick-knacky things, candies, candles, everything other than beer, wine, and soda, but kind of food products. That's what he did. Well, what he didn't tell me, even though I ask every year, is that now he's picked up selling. If you've ever gone to a convenience store inside, you see they sell like Delta 9, Delta 8, CBD, all the things that, aren't all that great. Well, I didn't do my part. And somehow they found on, I don't know where they were looking, because I look up all my clients, that they're now selling that. So of course, the underwriter is happy. We're celebrating his big win. And then, maybe their second level review looked at it and they were like, oh, heck no. Mm-mm. Nope, time out. And he's like, Raquel, I made my number. Now they're going to pull it back. And
Oh, no.
so he and I are having this conversation, and I just had to throw myself on the sword and be like, I didn't know. This is
Mm,
something that's changed, and you're right. You're right. They're absolutely doing this. I didn't know it. This is something they started. And I explained to him everything I found out from this client, because, of course, I called the client and I went off, and it's still a client. So I want you to know that I didn't disrupt that relationship. He was just like, well, I didn't think about it. Right. He's
mm,
probably been doing it for years, to be honest with you.
yeah.
And so we had to then place him with the surplus lines market. But what I told that underwriter is that I will go out of my way to find an account to replace this one
Mm,
that I put with him, because it probably made him look bad. It made me look bad. So I went out of my way to move a large account to them that didn't need to necessarily be moved, so that one, he can replace his lost revenue, because now he's behind goal and he
yeah.
was on target for something. And it built the credibility that, yes, I'll admit that this was a mistake that was made on my part, and I'm going to do what I can to rectify that to make you whole. And, everything else then was clean from there.
That's an awesome story. That's an awesome story. Yusef, do you have any similar experiences?
Not similar to Raquel's story. I would just say that, the the relationships with, surplus lines, uh, if you have to send your risk to a surplus lines broker or carrier, like you definitely, um, that trying to find the right place for that risk can sometimes be challenging.
Hmm.
Um, you know, I do have a risk. I do have a client that I actually had to go to multiple surplus lines brokers because I didn't
Wow.
really feel like I was getting the right answers.
Mm,
And, you know, it's a big risk for us. And of course, trying to losing the risk was not an option. So, you have to be aggressive as much as possible, and trying to protect your book. One of the things that I've used from NAAIA relationships, with a lot of people in NAAIA are on the carrier side. So I try to network with them to try to get a good understanding of the things that potential opportunities to send the risk outside of the surplus lines markets. Um, if you can go direct with them or develop that relationship, it's a big plus. And that kind of goes back, Baxter, to your question about market capacity and stuff like that. You're constantly looking to make sure you have the available marketplace to get your clients and risks that are both affordable and reasonably priced, but also, has all the coverages that are necessary for them in their business. I would definitely say, you know, um, not having these relationships, sometimes you send these risks and you get the call back. It's super important that you make sure that you go through those risks with a fine tooth comb, because you might find endorsements or exclusions that mitigate your actual, coverage. And, those are the last things, that you want to, be in a situation where you find the coverage and then you realize, oops, there's an exclusion on an endorsement that limits coverage. Then you're having to go back to the client and tell them, look, we gotta have to pay for an endorsement and or whatever, So, but you won't get that information from the carrier, from the underwriter. So, there's definitely a back and forth, and making sure that you don't, um, you're still in business, and you have to protect yourself in that space, and just to make sure that you are, providing the most value for your client in terms of, covering their hazard risk and operational risk, and also doing it at an affordable price.
And I just want to interject one small thing there, especially when you're newer or you're a smaller agent, you are using more surplus lines brokers or going through somebody else to while you're building your book. And that's why it's most important that you build credibility through someone else. So comes back to making sure everything is there because somebody else is representing you to that carrier. So you don't have that direct relationship with it. So you want to make sure you give them as much information as possible to represent you as they go to that particular market.
Absolutely.
Okay, we have about 10 minutes left. We have a few more questions. Please keep the questions going. We're going to try to get to as many as we can. I know we are up against time, but let's call this sort of the speed round. In regards to sort of surplus lines, question is, how should excess and surplus line producers reach out to agents to start sending over submissions and working together? Back to networking. Does coffee and donuts for the office still work?
As a touch point for your client, I think it works. I mean, I think it works in general, especially if you're trying to, have a conversation with a business owner. Certainly, walking in with coffee or donuts or bagels, might get you, 15 minutes of their time. But I would definitely try to plan it in advance.
I agree with that, Yusef. Like the more you can plan in advance is great. And if you're going to bring donuts, coffee, bagels, it needs to be good. If you just bringing it with the grocery store tag on it, I'm just being transparent. Like, don't come with just the Publix and the Harris Teeter and the Kroger. You need to come with some good stuff. I'm just telling because my team will look at you and set it down and be like, well, no, well, we're here. But if you want to get to me, then you need to plan that in advance, and you also need to have something for us that's more than just the snacks. Like, here's something new we've done. Here's some big things that we've done. Here's your book of business with it. Here's how you're performing. So you need to come with us with some value that you're going to bring to us, along with really good snacks.
Really good snacks is the key to Raquel's heart. Listen, I have some personalized note cards, just with my name and initials on it, that I will send over to prospects as well as clients. Those small details, that stuff, if as long as the people are still in the office or on location, those things still matter.
Mhm.
AI, how are you both sort of using AI, whether it's analyzing data, drafting just communications, or are you using it to automate any parts of your business?
AI is probably my fifth employee for me as a small business owner. I just put it in to ask questions, to draft different things. I mean, for me, it doesn't replace my thoughts and process. It just makes me go quicker from that standpoint. And as far as dealing with underwriters, um, I have not yet used it for that because there's just so much more technology from an agency standpoint that you can purchase that helps you build your applications from that standpoint. I haven't had to use it for that.
Yeah, we're similar to Raquel and what they're doing. We definitely use it. I think what I'm seeing now is more, you know, third party companies coming to market, specifically looking to target insurance agencies and brokers. We haven't taken that step. I think, what we're looking to do is to kind of create the processes internally and build them internally so that we don't have to, we're not reliant on third parties for the annual increases. We use a lot of third-party tools, risk management tools, application tools, uh, organizing tools, CRMs. That's a big part of our tech stack. But you know, with the way that you can use the agents, the AI agents, you can certainly incorporate it into your um, into your website, into your CRMs, and connect them using different tools. So we're trying to do that to mitigate some of the additional costs, which I can definitely see if you buy a whole package together, it gets very expensive.
Yeah, it can get expensive. They can even answer your phone AI, your email your email out to your clients. You can ask it to build you that. Remember, I talked about those touch points. You can ask AI to build that and you can make it for yourself. I mean, just test it out and see what are you missing and what you might need for touch points to your clients. That's probably where I best use it, less for underwriters.
Got it. I have two questions that are close enough together that we'll make this the last official question to you both. Um, how do you suggest agents avoid sort of burning bridges with underwriters when they may send multiple submissions but may not always place coverage? I think we talked about that a little bit earlier. And that second piece of that is, have you ever had issues with approaching multiple surplus carriers for the same insured client?
Um, I have I had multiple surplus carriers or brokers, come back to us saying that they've approached the market that we sent the risk to somebody else. Yes. And, my answer to them is, do your job. They take a piece of the commission. And so we're asking them to do the work. And if they're not doing it, then, you know, it is what it is. As far as, what was your first question?
Just around sort of just burning bridges.
Burning bridges.
Yeah.
I think, yeah, I never look at it from that perspective. It's kind of like, you run a play and then, you get 5 yards and then, you don't get the first down and you got to punt. It's on to the next play. So I never look at it from the standpoint that they've done something to me or against us. It's just a part of the business process. And so, if I can, I'm still going to, um, you know, use them and go back to them because we're trying to build, and as we build, we need as many resources as possible.
Raquel, last words on this?
On that one, I mean, it's a partnership. It's a symbiotic relationship. They need you and you need them. So I think Yusef said it right. You just got to move it on and do better the next time, or expect them to do better the next time.
Great, great. So I know Precious is going to wrap us.
Hey guys. Oh man, what a discussion. We've got questions rolling in, such high engagement. So again, on behalf of NAAIA National, I want to thank our talented team here, our wonderful moderator, as well as our panelists, for sharing such nuggets of wisdom, best practices, takeaways. So again, your involvement, your participation.
Thank you for watching this flashback episode of NAAIA. We appreciate your time and hope you found the insights valuable. Stay tuned for more enriching content. Until next time, thank you for being a part of the NAAIA community.